Time now for Futures in Focus. Oil is beneath $50 a barrel still here in New York trading, and the dollar is fluctuating as traders return from the long holiday weekend. Joining us from the CME to discuss is Todd Horwitz, Chief Market Strategist at Bubba Trading. Todd, you say that the market is not even focused on OPEC, that OPEC is basically irrelevant to WTI.
Good morning, Vonnie. And I think it is irrelevant. I think you can certainly see by the trading action that we've had over the last 7 months. When this first OPEC announcement came up, oil spiked up to about 55. The next high was 52, and now we've gone down again. I think that, again, we don't have any we're not being held hostage by OPEC here with WTI. We've got frackers that are willing to pump, so if they're going to try to artificially put the price higher, then our frackers are going to keep pumping. You can see that the rig counts are going up week by week because we're going to keep pumping oil and sell futures against it. And again, the OPEC is a phony, crooked organization anyways. I mean, they don't follow the guidelines they set to begin with. So I think OPEC has no meaning whatsoever here other than a quick pop here and there. But other than that, I think it has nothing.
So if the rig count continues to increase as you propose, Todd, do we see prices continue to fall? And if that's what's going to happen, then why haven't they fallen already?
Well, I think they've come down. I mean, we saw last Thursday we had a pretty big sell-off. I think if you look at a chart, you can see the trajectory is certainly to the downside. I think that oil doesn't become a buy in my mind until it gets down to around 40. I think we've got that coming in. Now, you'll see there'll be some rallies here and there in between it. But again, as long as the downtrend remains, which is what we have since the first day of OPEC, we've got a downtrend. And until that changes, you want to continue to be selling oil here because, again, there's no real reason to put it out. We have a 200-year supply in the ground that we can get to. So I think there's no issue.
Well, what about the dollar, Todd? Because it's been sort of consolidating in the last while, but now it's difficult to know which way it will go with these comments on trade from President Trump.
I think the dollar itself has been obviously very weak, and I think what happened is we overpriced it into the first rate hike. Now we're coming into a potential another rate hike, but the dollar appears to be very weak. I think the dollar will probably trade down to about 94 before it starts to perk back up and make a run back at par. But even at par, oil prices should continue to fall. The only way that I think we'd see a dramatic effect on the dollar against oil is if a dollar tries to run back to those highs it made last year. But I think you're seeing some dollar weakness, and I think that's what's going to be the story here.
So, Todd, what trades are you liking for today, at least?
Well, I'm looking to sell oil, and I'm looking to sell and I'm looking to sell dollars on a rally. Again, oil, I'd like to be a seller around 50 if we can bounce back down there. Now we're down about 80, 90 cents this morning, but a rally back to 50 would be a great sale for me. I think that if you look at the dollar, a rally back to 98 or 98 and a half would be a spot to sell it, looking for it to come back to 94, because I think that's what you're going to see in the bigger picture. A weaker dollar, a weaker dollar, weaker oil, which is not necessarily the right relationship, but that's the way they look right now.
All right, Todd Horwitz, thank you. Chief Market Strategist for Bubba Trading with today's Futures in Focus.